There's something significant going on in China. There's significant buyers of all the metals. They really started with gold last year. Gold got expensive, so they trickled over to everything. The bottom line, though, with copper is it's not a speculative metal. It's industrial, and China's #1 source of demand. It's going up more because of issuances with the tariffs from the U.S., and supply constraints. And I'm very concerned. The copper's, I'm very concerned. As long as the stock market gets going up, it's fine, but I'm afraid it's going to tilt back lower. But here's a key thing that's oftentimes directional for copper. Iron ore hasn't been doing well. Chinese bond yields haven't been going up. They've been going down. So I think by this time at the end of the year, we're going to look at the metals like we are cryptos now.
All right, Scarlet, we all know that Mike McGlone is based down in Miami. Get this, Saturday in Miami, low temp, 37 degrees. People are going to be freaking out down there.
That's brutal for Miami.
That's brutal.
I mean, fortunately, Mike McGlone knows how to deal with this because he comes from here.
He's a grizzled guy from the Midwest. Mike, when I look at copper, I don't think speculation. When I maybe look at some other precious metals, you can tell me some people are speculating here. So is copper, when you see a move like today, is it really based on some fundamentals, or is it too also subject to some speculation?
It's short moves like this, almost always speculation. Some of that short covering, I myself thought it was a worthy short around 6. It still might be, but it's still a bull market. So we're covering those people out. They're taking them out on stretchers. The bottom line, though, is #1 thing to remember about all these metals, when they go up, that's their own enemy. And then they end up going back down. That's #1. The thing I'm really worried about this year, silver leading everything. When silver leads rally, you back off. And that's just an indication, because silver is usually the one that causes the most pain. And we're overdue for those days where it's up and down, and maybe both, 10% in one day. It's way overdue for that.
Yeah, silver doesn't have the volume or the liquidity that a gold does, or even a copper does. Mike, we see these commodities getting a huge lift as the U.S. dollar sinks, the Bloomberg dollar index hovering near this 4-year low. What is leading what? Is it the dollar or commodities?
Well, there you go, Scarlet. The dollar's weaker. I think that's leading, and it's kind of not said, but we all know if you want to fix a trade balance, you need a weaker dollar, so that's what's happening. The bottom line, though, to me is, remember, it's January. This is the time of year where you put on new positions, and oftentimes it's the wrong thing to do. Crude oil peaked around January last year. Corn peaked around the same time last year. And it's just, is this going to be enduring? So to me, the #1 thing to look forward to is, can we keep this up? And that's why when you start out with the stock market, has to stay up for most of the industrial commodities to go higher. Most all of them are. And the only ones the least industrial is gold. So here's one thing I'll end with. As of this morning, the ounces of gold it takes to buy one S&P 500 is 1.26. That's the lowest since 2013. So the stock market is actually collapsing versus that ancient store of value.
Interesting. Okay. Before we let go here on oil front there, Mike, I guess when the U.S. sends in a carrier group near the Iranian waters, that gets people's attention. Is that kind of what we're seeing here?
To use President Trump's word, the word armada in that area is always going to boost crude oil. But the #1 thing crude oil traders like is when they spikes for potential supply disruptions out of the Middle East. They just love that as a chance to sell. So crude oil around $65 a barrel WTI is right around last year's mean median mode. It's the first place to test a short to see if it proves you're wrong. And I think potentially by the end of the year we'll be lower than that. But remember, the bottom line is, for the midterms, we need lower energy, lower interest rates, and lower yields if Mr. Trump is going to have a chance, and he has an ability to potentially make that happen.